About Kunal Bothra at this point, try and get a perspective of how he's seeing things. Kunal, very quickly on the markets itself, what's the kind of move you're penciling in today? Yesterday was, you were quite spot on in terms of the moves. It played out exactly as you were rather indicating, at least at the start of day. What do you see today?
Today could be a mixed day for the markets. I would probably expect that we may just about go into a consolidation. I would not expect this 170, 180 points on the downtick on the index. You might probably expect that maybe in the second half there could be some pullback, which could probably come back again, and you might expect the Nifty to close maybe in the range of 100 points plus minus for itself. But it's been a spectacular last 2 days because it's not just about the Nifty recovering 500, 600 points from the previous swing lows, but it's the manner in which the indices have recovered. It's not as if that we've seen negative days for the index. Yesterday was also one of the days where the index at one point of time, the first hour or so, was down almost 150 odd points. Even day before yesterday, that's on previous week Thursday, we had seen a similar kind of a price action for the index. But then to see the index closing on an extremely positive note indicated that there was a very strong fight back from bulls, which occurred over the last couple of days. The only so in terms of the data point is the FI selling, which I believe could still be a concern, which could probably dampen the rallies every now and then for the indices. But I think once that sets apart, you might probably expect the index to be a lot more stable.
Kunal, how do you see the kind of positioning which is getting built on Nifty futures? Now, if you look at the entire OI of Nifty futures, it's almost at 55,000 odd crores, which is in the last 2 to 3 years is the highest OI we are heading towards. Normally, we see that towards the end of the contract, which is happening. There's a lot of positioning which is going, short position, which is still getting built on Nifty, even though the long positions are around 17.5% for FI long positions. Do you see that as a cautious signal which is coming in that markets, while the news is it's sometimes it's positive or negative, the build up is is in such a fashion that it's it's pointing towards that either it's going to be sell off which can come in if there's anything negative which comes in today actually.
So partly yes, Sajid, because over the last I think 7 months, June or July 2025 onwards is where we've seen the FI positioning being on the extreme short side, on the FNO side specifically, where the OI started to swell more on the short position side. From there on, we've seen continuation from the stance. Yes, over the last I think 3-4 weeks, the numbers have slightly increased on the short side, but I would probably expect that even the long built-up formations, long built-up numbers, they have started to improve because I think just last week or maybe the week prior to that, we were at a point where it was almost 11% or 12%. As a long build-up, for the index futures, that number has increased marginally higher when the net OI has increased. So which means that there is some bend, some skew, which has now come back that maybe the markets could stabilize at current juncture. But the positioning of the FII, so I think what I can probably imply from these numbers is that the positioning is still on the negative side. So it's not as if that the last 2 days of recovery or the 3 days of recovery in the previous week or the week prior to that indicates that there's a turnaround of sorts. It's just that you're seeing a bounce back in the entire scheme of things when the market trend is still on the negative side.
Okay, and Kunal, amid a market like this, where is the stock bias this morning?
So I'll go with few individual names, and for example, SAIL is something which starts to look attractive at the current juncture. The stock placed at 160 odd mark. I think it's an excellent chart because it's one of the few metal stocks which is actually gearing for a swing breakout on the daily time frame charts. The stock is also crossed about the key short-term moving averages, the 20 and the 50 DMAs. That I believe could be a point of positivity for the stock in the near term. 166 is where I would place the targets for the stock and stop loss to be kept at 157. And Sona BLW is the other stock which is looking extremely attractive. In fact, the stock has bounced off from its 50-day moving average at a time when many of the stocks, almost 80-85% of the stocks in the mid-cap universe are trading below their 200 DMAs. It's rare to see the stock, like Sona BLW, which is still exhibiting a lot of strength and trading above the long-term moving averages. So the near-term and the medium-term price trends are positive. Looks like that the stock is getting up for another swing breakout on the upside. Would suggest a buy with a target of 530, stop loss at 498.
Okay, so SAIL and Sona BLW looking good to Kunal today. Let's shift focus, start talking about the big event that the street is gearing up for, and that is Q4 earnings. Now, the first sector, as always has been the case, is going to be IT. That's going to be coming out with its numbers. So here's what you can expect from the overall IT sector in terms of earnings this time. Yes, the rupee and the kind of depreciation we've seen over there before the recent revival in rupee has been a positive, or has been rather a tailwind for most of these IT companies. But what is the extent of that impact? Because it started quite late in the quarter, we'll have to wait and watch for that. Overall, a sequential weakness is what we're seeing, at slight recovery at best for some of the companies, but on a year-on-year basis, because this rupee has helped, we are expecting to see more stable growth. But largely for a sector like IT, where you're looking at sequential trends, the growth outlook for FY27 remains cautious, anywhere between 3 and 5% on an overall consensus basis for the IT universe. And of course, this is impacted by geopolitical uncertainty, Gen AI-led deflation. But what's looking good is a healthy deal pipeline. At least that is what brokerages are penciling in on a consensus basis. So when the numbers do come out for a lot of these companies, we're going to be looking at the constant currency growth, which for the broader universe is expected to range anywhere between a negative 3% for something like a Sagility to all the way to a positive 10% for something like a Tata Elxsi. At least this is what the Kotak poll says. Other than this, you also have the impact of Gen AI that we're going to be looking out for. What are some of the hiring trends? What is the upskilling trend when it comes to Gen AI and AI otherwise also? Deal wins, TCV momentum, which segments have done well. BFSI is expected to have done well for a lot of companies, especially TCS this time around could see BFSI outperforming its other internal sectors. So that is also going to be something to watch out for. Now, margins versus currency tailwinds is also going to be something to keep on your radar this time. And more importantly, is going to be the commentary that comes in from at least the top 5 of the IT companies, your TCS, Infosys, HCL Tech, Wipro, as well as Tech Mahindra. What is the outlook on FY27, or even if there is any visibility on the quarters to come in terms of rupee, volatility, geopolitics? There is so much to watch out for actually when it comes to the IT sector. When you talk about the big 5, the sequential growth is, in terms of constant currency, is expected to be anywhere between a negative 1% or a negative 1.7% rather for an HCL Tech. That's what the poll is penciling into, all the way to a positive 1.2% for TCS, with your Infosys, HCL, Wipro, Tech Mahindra all lying in the middle. So largely this is what the expectation is from IT this time. We'll have to wait and watch to see what the impact of the rupee has been on IT companies, but largely a slowish sequential growth. But yes, on a year-on-year basis, we're expecting to see some good moves from IT. So that's the roundup on IT. Kunal, your view on the sector, the behavior that we've seen from the IT space, and picks within the sector, what's looking good?
See, as of now, so what happened is over the last, I think, 7-8 days, the IT stocks were the ones which started to rally first from their previous low. So whether it's TCS, Infosys, HCL Tech, Tech Mahindra, even the mid-cap IT names, Persistent, Coforge, etc., they started to look a little bit more better, and they're the ones which start to show signs of good recovery from their previous swing lows. But it's just that in the last 1 or 2 days, specifically, I think yesterday, we saw the stocks not participating in the same manner in which many of the other sectors participated. So it indicated that maybe market participants are waiting for the results to come out and then probably take a stance to maybe further go long into the IT stocks or try and build up fresh delivery positions over there. So I think in that sense, it's maybe like a wait and watch for the IT majors. But I think so far the positioning on the charts indicates that Tech Mahindra and HCL Tech are the 2 strong ones which are emerging as more relatively strong compared to the other large cap peers. And from the mid cap, it's still Persistent as well as Coforge, which are looking very strong on the short term charts.
IT is still up 5.5% in the last 10 days actually, since March 30th. And do you see this, there's a momentum behind IT, because one, you have a currency tailwind which is helping on the top line and EBIT level, but from a trading point of view, do you see that, there've been enough sell-off that has happened, and now there may be some consolidation or, movement for IT?
So, I think if we remove results as an impact, then, the sell-off which has happened for the IT stocks from the February highs, almost like a 10,000 point correction for the IT index from 40,000 levels to almost 30,000 mark. Now, after that kind of a sharp and a steep correction, you're bound to expect that these stocks would go into a consolidation. Now, in the process of doing that, there are many times that, if the results come out positive, so say for maybe 25% of the stocks from the entire universe of the IT index, you might expect those stocks to come back into an outperforming spree. But the majority of the stocks within the band, they would still maintain into a band of consolidation. So the view and the stance has to be try and take very lighter positions over here for the IT stocks. Look out for the relative leaders or relative strength stocks from the entire pack, and then try and take maybe short-term positions in terms of catching the near-term rally. But I don't expect that these stocks would come back into a V-shaped recovery because most of the indicators are still into a very negative territory. And even the positioning for the IT stocks, as I was pointing out earlier, that traders trying to wait for the results to come out and then try and take a stance to maybe add positions further, it still tells you that it's more on the cautious side. It's not on the optimistic side.
So which stocks, the top rank stocks one should look at, or the second level, which is the Coforge, persistent, emphasis kind of stocks?
So the best matrix to look out for here we use is relative strength, RS. So here we try and calibrate that which are the stocks which tends to be a lot more stronger from the rest of the pack. When we did this relative strength study in the last couple of days, it comes out that HCL Tech and Tech Mahindra are the two strong ones, and they've bounced back, I think, around 7% or 8% from their previous swing lows, as compared to maybe a TCS or Infosys, which have rallied approximately 4% to 5%. So there's this slight relative edge which is there for HCL Tech and Tech Mahindra. Amongst the mid-cap IT names, it's Persistent and Coforge. So there are two ways to look at. One is the price gain for these stocks, and the other is the timing of these stocks. When they move ahead of the entire pack, that's where we call that as an relatively timing edge as compared to a price edge. So I think on both the fronts, timing as well as price, you're seeing HCL Tech and Tech Mahindra on the large cap front still looking very strong.
Interesting. Okay, what we'll do is slip into a very, very short break. On the other side, we'll continue tracking all that's playing out. There's plenty happening, by the way. There are a couple of big announcements which have come through. We'll track those, try and get views even from a technical and a fundamental perspective. Stay with us.
Back with the market, and so much to talk about, so many Q4 updates that we've been looking at. But before the break, we were talking about the FMCG sector, the staples in particular, on the fundamentals. Let's also get a technical view from Kunal. Kunal, so far we've got a decent update coming in from Godrej Consumer, decent from Dabur as well, and very good from Marico. These are some of the staples on top of my mind right now who've come out with their updates. Other than, yes, jewelry has been doing well, but let's keep jewelry aside. Let's talk only about staples. On the charts, how are some of these companies shaping up? Are you seeing any change in momentum for some of the staples companies now that the indication on the fundamental is at least volume growth is expected to improve on a consensus basis? On the charts, is this optimism already priced in, or do you believe there is further, let's say, room for some of these companies to grow?
See, what I can sense on the charts over the last, I think, few days and couple of weeks specifically is that, the selling for many of these FMCG stocks have stopped. Now, for example, there was a point, I think, in the previous leg of the major sell-off for the market where HUL, Dabur, Marico, etc., they were the ones which are beaten down significantly, and you rarely see stocks in this category fall by 15% or 20% in a matter of, I think, 3 weeks, 4 weeks. And that too after a correction which has already occurred for these stocks from the 2024-25 highs. So I think in that context, it looked like that maybe the sell-off for many of these stocks had gone to an extreme, and now you're seeing these stocks stabilizing. But the indicators are still negative. The price and the volume data for these stocks have not yet converted into a big buy for many of these names. Most of the times what happens is when you see these stocks go into a sharp correction, there comes a point when the risk reward looks attractive, and that entices a lot of long-term investors to start chipping into these names. The other way to look at it is that if the markets are such hugely volatile, you would want to park money coming back into the defensives, which FMCG usually comes back into that kind of a basket. But we've not seen that positioning happening for the FMCG stocks in the last, I think, couple of weeks or in the last few days. That's why I would probably believe that you might probably expect a zone where these stocks may move sideways. You might see 1 or 2 stocks maybe trying to come back into a counter rally or a recovery mode, but that's the best which I think which we can attribute. unless the market starts to show a very dominant sign of a big turnaround, I would probably assume that the FMCG stocks would probably be more sideways and just about lag the overall benchmark indices.
Okay, all right. Samir, you're positive with regard.
But shifting focus, Jubilant, we've had a fundamental view on that, but just touching upon what the quarter four update looked like, largely mixed. And I say mixed because India performance was weak. On the flip side, Turkey has done very well. Their like-for-like growth in India, extremely weak, but on the flip side, the store additions are very strong. So in a nutshell, this summarizes what Jubilant's quarter four performance has been. Like to take you slightly higher into the numbers, the quarter four consolidated revenue is 10.5% higher than the consensus estimate. That number has come in at 2,506 crore rupees. But if you take a look at the standalone number that focuses only on the Domino's India business, that is 5% lower than what the street was penciling in. So some weakness reflecting in the India operations. Overall FY26 numbers, both on a consolidated and standalone basis, largely in line with what the Bloomberg estimate is. Shifting focus to India, let's talk about what the like-for-like growth is. It's come in only at 0.2%. The street's estimate was 4%. So look at the divergence between both of those numbers. Quite a lot of weakness reflecting on the back of LPG issues. That is something that the company has flagged off. And also Elara, who's come out with a note on it, says that Jubilant Foodworks, amongst the QSR space, is the only company who has more than 90% dependence on LPG. So on the back of the disruption that we've seen in the Middle East and its consequent effects on LPG, the company's performance in quarter four has been very weak. So the like-for-like growth has been strong around 12%, then it moderated to 11, came to 9 in quarter two, fell to 5 in quarter three, and now has just come in at 0.2%. So this weakness, it has been around for some time, but yes, this is a very sharp moderation in its like-for-like growth. However, on the flip side, Turkey's like-for-like growth has come in at 9%, which is very solid when it comes to their international business. Now, talking about their store count, the overall net addition for Jubilant this quarter has been 69, with 59 stores alone being added in India. The street's estimate was somewhere around in the 30s, and 54 stores in terms of store addition looking very healthy over here. This is in fact Jubilant's healthiest store count addition in the last 10 quarters. So that is also another positive that stands out over here. Overall, Elara has come out with a note on these numbers. They've maintained their buy rating, continue to price the stock at 780 rupees per share. That's their target price. They say that like-for-like growth of 0.2%, it reflects a same-store sales growth decline of anywhere between 1.5% and 2%, and that's a negative surprise for the street. This is something that they had also not seen come in. So yes, that's their outlook. They say that store expansion is good, but this could also lead to a modest upgrade to their store count CAGR estimate. So another positive that they're flagging off, but they've also said that on the back of these numbers, they're anticipating up to a 3% reduction in revenue estimates and up to an 8% cut in EPS over FY26 to FY28. So that's the outlook coming in from the House of Elara too on Jubilant Foodworks. Very mixed because Turkey has done well, India's store count has done well, but what has not done well is the India revenue as well as the India like-for-like growth. So in a nutshell, this is what Jubilant has done in quarter four. Kunal, quick take on the charts for some of the QSR plays like a Jubilant, then you have Devyani and that whole Sapphire merger that will now play out. And let's also throw in something like a Sapphire or a Sapphire, Westlife. Talk to us about what is looking stronger on the charts at least.
See, I think none of them, frankly, because many of these stocks have beaten down by I think a 40% to 50% correction from their 2024 highs. I remember I think Jubilant Food was somewhere around 740, 750 levels. And from there, the stock on the monthly charts has been consistently going into a lower highs and lower low formation. Just about I think a week or a couple of weeks back when the stock made a low around 430, 440 mark, it looked like that maybe the stock is just about trying to find a near-term bottom, trying to arrest this huge correction the stock has been seeing over the last 18 months. But then I think the volumes tended to lack a little bit more punch for the stock in the near term, and that's why I would probably believe that you might see this pattern of lower highs and lower lows being continuing for stocks like Jubilant Food. Even for Devyani International, I think the stock was almost at 170, 180 start of 2025. From there, the stock has come back towards 75 to 85 kind of a near-term support for itself. So the long-term charts is still very negative for many of these names. I would probably expect that these stocks may go into more of a time-wise correction first. And once the market starts to recover, only then we can expect these stocks to show durable signs of recovery.
Firstly, India business is not doing as good, right, for Jubilant.
For Jubilant, yeah.
And that's been the trend for last couple of
It
quarters.
has. Like I highlighted their like-for-like growth. For the last 6 quarters, it started at 12, moderated to 11, then came to 9, 5, and now just at 0.2. So that moderation in like-for-like has been around for quite some time.
So
But seasonally strong now because you will have the IPL
why you
season.
don't eat pizzas on?
No, that's not true. It's just that
How is it?
it's just that IPL brings in with it a sense of pizza eating. So I'm guessing that it'll be a strong. And generally, I mean, when it's widely covered by analysts, they generally suggest that during the IPL season, you always have a pickup.
There's a festive season as well when you eat pizza as well.
Yes, but that didn't happen Jan to March either.
Yeah,
so we didn't have
You know the thing
any
about
festivities.
QSR is it's not about taste and preferences because yes, pizza is going to be a crowd favorite forever, but then
Yes.
you have But Kunal, let's talk about some of your mid-cap ideas. Of course, I want to talk to you about some of these large-cap metal names too, but before that, let's get the mid-cap ideas out of the way. What's on your list today?
So delivery is something which is looking very attractive and strong on the charts. In fact, the stock over the last, I think, many weeks has been trading at this 425 to 435 kind of a band. So it's trying to absorb a major part of the market volatility and correction. And every now and then, I think the stock comes back and comes very closer to the swing breakout level. So I believe that potentially over the next few days, if the market stabilizes, you might expect that this stock will finally break out of this consolidative band and start to show signs of a robust price action. The encouraging point is that the MACD for the stock on the daily charts has started to enter into a bullish territory. And if that persists for the next couple of days, you might expect the stock to head up significantly higher. So a short-term buy on delivery, targets of 450, stop us at 426.
Okay, so that's on some of these metal, on delivery rather. But let's refocus once again. We were talking about metals. Ashesha was talking.
Our next 1 hour, we might see the index maybe trying to correct a little bit more, like what we've seen the last couple of days, where I think until the first couple of hours of the market open, the index continues to remain to a negative bias. But then the second half is where we are expecting, I would probably expect the markets to try and at least cover up this huge 600, 700 points downtick on the bank Nifty, or maybe a 200 to 50 point downtick on the Nifty. So I'd probably expect that in the second half of the trade today. In terms of opening trade, I would still look at Trent as one of the classic stocks over here, because the stock coming very closer to a breakout of the 3,800 mark where it closed yesterday. So expecting that over the next couple of days, the stock will probably see a follow-through up move after yesterday's strong uptick.
Kunal, how are you looking at some of the real estate companies? The realty stocks have been under pressure. Lodha, Puravankara, Brigade, DLF.
So I would expect that somewhere down the line, these stocks will bound to see a good recovery. So the risk reward starts to look very positive for the real estate stocks. In fact, we did this monthly analysis also, that for the past 5 or 6 consecutive months, you've seen that the realty stocks are trading with a negative price performance. And I think out of the last 5 or 6 months, there were 2 or 3 months consecutively where the realty index was one of the worst performing index. Now, when you see that kind of a stance for the index as such, you're bound to see a point where there's going to be a good recovery for many of these names. The other matrix to look out for is that names like DLF, Godrej Properties, Oberoi, Prestige, etc., these stocks are at least 15% to 20% down from their 200 moving averages. So that also calls for a mean reversion. So from here till the next 3 months, 6 months, I would expect that the risk reward looks extremely positive for someone who has that kind of a medium-term time frame, and would suggest a buy in many of these real estate counters.
Okay. All right. Kunal, we'll let you go.